Hello, dear students. Welcome you again to Law 434, Taxation Laws of Bangladesh, including customs and VAT. This is class number 3, video number 1. We are continuing with the heads of income. In the last class, we discussed income from business or profession, and today I will continue with that income from business or profession. As I discussed earlier, what is income from business or profession, that has been discussed in section 28. Please go through well section 28, because income from business or profession is very important for exam purpose. As I told you earlier, I am reiterating in this class as well. And section 29 deals with the expenditures or expenses to be deducted from income from business or profession. And section 30 deals with the issues called deductions not admissible in certain circumstances. So as I told you earlier, that section 29 is a very, very long section. Around 8 items are there. And there is one omnibus clause that if you can identify the expenditure, then of course you allow that expenditure. But if you cannot identify that expenditure under any head or any item, then if the assessee or the taxpayer can prove that this expenditure has been spent for exclusively and wholly for business purpose, and you are convinced and satisfied, then this amount of expenditure will be adjusted or deducted from income from business or profession. And also I told you that there is one section 30, which deals with deductions not admissible in certain circumstances. So if I know what are the expenses not admissible in certain circumstances, then all other expenses, 7 except those expenses as mentioned in section 30, the rest of the expenditures are allowed. So now we will continue with section 30. I started discussing section 30. Now I will continue today with section 30. So again, section 30 is very important. I repeat it. Now section 30 says, the caption of section 30 says deduction not admissible in certain circumstances. So you have to memorize the items well, because these are very important to discuss income from business or profession. Now we'll go itemized. First of all, section 30 clause A says, any payment which is an income of the payee classifiable under their salaries if tax thereon has not been paid in accordance with the provisions of chapter 7. So it says that if tax thereon has not been paid in accordance with the provisions of chapter 7. So there is one chapter called chapter 7 in our income tax ordinance, and then chapter 7 deals with tax deduction at source. I repeat, chapter 7 of the income tax ordinance 1984 deals with tax deducted at source, or deduction of tax at source. That's the right term, deduction of tax at source. What it means? Deduction of tax at source means that deducting tax at the time of making the payment. So again, deduction of tax at source means deduction of tax at the time of making the payment to the person who is entitled to get the payment. For example, I'm a teacher of School of Law. So at the end of the trimester, I'll get my payment. So the law says that before the Break University makes me the payment, they must deduct tax from that payment before they give the money, before they give the salary to me. The Break University authority must deduct the tax from that payment. So for example, if tax is 10%, then if they give me 100,000 taka, then they will not give me 100,000 taka, they will give me 90,000 taka, because they will deduct tax 10% from 100,000 taka, 10,000 taka, and they will give me the rest 90,000 taka. What they will do with the 10,000 taka? That 10,000 taka they deduct as per the provisions of Chapter 7 of the Income Tax Ordinance 1984. And after deducting the tax, the Break University Authority, they must deposit the tax with the government treasury, I mean with the Bangladesh Bank, within a specific time. What is the specific time and what are the detailed provisions of tax deduction at source under Chapter 7? We'll discuss it whenever we come to that particular chapter. Income deduction of tax at source under Chapter 7 of the Income Tax Ordinance 1984. So please remember and try to memorize Chapter 7. So if somebody asks us the question, what Chapter 7 deals with? Chapter 7 deals with deduction of tax at source. Deduction can be made from various heads. Deduction can be made from contractor, deduction can be made from the salaried person, and deduction can be made from advisors, technical support, etc., etc., etc. Whole lot of list in Chapter 7. So when we'll come to that chapter, we'll discuss a bit details about the tax deduction of tax at source. So now the number one item in section 30 says that any payment which is an income of the payee classifiable under the head salaries, if tax thereon has not been paid in accordance with the provisions of Chapter 7. So by now you know what is Chapter 7, and deduction of tax at salary, I have given you specific example of mine. Now item number 2, it says that any payment made by an assessee to any person, if tax thereon has not been deducted and credited in accordance with the provisions of Chapter 7. Making payment to anybody. Example is that if you employ a contractor to build a house and you make a payment to him, then as per the provisions of Chapter 7, you must deduct tax and credit it to the government treasury. So one important issue is here, please note, deduction of tax is not all. Deduction is not all. After deducting the tax, you must deposit, credit it to the government. So both the things are important. One is that, as the law says, the law dictates the authority, deducting authority, that you deduct tax and you credit it to the government authority according to the time as prescribed by the income tax law. So that is number 2. Number 3 says, any payment by way of salary to an employee, if the employee is required to obtain a 12-digit taxpayer if taxpayer identification number under the provisions of this ordinance, but fails to obtain the same at the time of making payment. So number 3 says, what it says? It says that you are an employee. So for example, you are working in a corporate house or in a company. So the law says that you must have a 12-digit taxpayer's identification number, which you call TIN number, TIN number. So you must have taxpayer's identification number. By law, you are required. Who are bound to have taxpayer's identification number, we'll see in the appropriate place and relevant time. So now say that you are doing a job in a company, and you, as an employee, you are required to have a 12-digit taxpayer's identification number, and it is the duty of the employer to obtain that 12-digit taxpayer's identification number from you. If the employer fails to collect the 12-digit taxpayer's identification number from you, then if the salary is paid to you, that salary will not be allowed as a deduction from income from business or profession. So this is very important for the employer to have the 12-digit taxpayer's identification number. The next one is that any payment made after the tax day by way of salary to an employee, if the employee is required to file a return of income but fails to file the same before the tax day or obtain the time extension as the case may be. So any payment made after the tax day. So this is the new term which is called the tax day. What is tax day? 30th of November is known as the tax day. So that's the last day of submission of income tax return. So again, what is tax day? Tax day, 30th of November each year is the tax day. That is the statutory tax day. This is a day like Father's Day, Mother's Day, Valentine's Day, something like that. So the law prescribes 30th of November as the tax day. So please remember this one, because you might face multiple choice questions, answer questions, etc. On this issue that tax day is 30th November is known as tax day, 30th October is known as tax day, 30th September is known as tax day, etc. etc. So 30th November is the tax day, note well. So what it says that any payment made after the tax day by way of salary to an employee, if the employee is required to file the return of income but fails to file the same on or before the tax day or obtain time extension as the case may be. So as an employee, you must submit your income tax return in time. So what's in time? Now note, I tell you one thing, that is accounting year, tax year starts from 1st July to next 30th June. So all the time, income year. First of all, income year. What is income year? Year in which you earn your income. So this is like that. So you start from 1st July to next 30th June. This is the income year. So what will be the tax year? The following year from 1st July to 30th June. That will be the tax year. So that was tax year. So in case of submission of income tax return, what happens is that you can start filing your return from 1st July, but the last day of submission of income tax return is the tax day. Now what is the tax day? 30th of November is the tax day. So under any circumstances, you must, as an individual taxpayer, return submission date for company is different, but for individual taxpayer, you can start filing the return from 1st July, but you must submit the return by 30th of November, that's the tax day. But what you can do is that you can take some time extension from the Deputy Commissioner of Taxes that within that tax day, you cannot file the income tax return due to some unavoidable circumstances or some sort of constraints. So you must apply to the Deputy Commissioner of Taxes, and the Deputy Commissioner of Taxes might give you an extension of time to submit the income tax return within the extended period of time. So if this is not the case, then, and if this is the case that you didn't submit your return and you didn't take an extension, and your employer makes you salary payment after that tax day, after the tax day, then it is an expenditure for him, but that will not be allowed from his income from business or commission. So this is very important. The next says that any payment by of salary, interest, commission or remuneration made by firm to a organization of persons, to any partner of the firm or any member of the association as the case may be. So it says that if the partnership, what is partnership? There is a partnership law in our country. Probably you have gone through that one. In case of partnership, what happens is that unlike the corporation or unlike the company is a separate legal entity than its shareholders. But in case of partnership, whenever we say partner, it means partnership. Whenever we say partnership, it means the partners. So it means that whatever the partnership business makes as profit, it is distributed among the partners. there is no separate entity of the partners and there is no separate entity of the partnerships. The income tax law says that as a partner, you cannot take any salary from the partnership, you cannot take any interest from the partnership. If you do so, this will not be allowed. This will be added back to your income and it will be taxed accordingly, because being a partner of a partnership firm, you cannot take salary, you cannot take interest, etc., etc. The next one is any payment by way of brokerage or commission made to any person who is not a resident in Bangladesh, unless tax has been deducted therefrom under Section 7. This law, this says that again we have to refer back to Chapter 7. Chapter 7. Sorry for the inconvenience. Chapter 7 deals with what? Chapter 7, you are right. Chapter 7 deals with deduction of tax at source. The example of which I gave you, Section 30, the first item says that if if you pay salary to any person and you don't deduct tax as per provisions of Chapter 7, then this expenditure will not be allowed. Now it says that again we say that you have made a payment to a non-resident person. You have made payment to a non-resident person. Now, and as per the provision of Section 56 as contained in Chapter 7. So again, you have made a payment to a non-resident person and you have not deducted tax at source under Section 56 as contained in Chapter 7 of the Income Tax Ordinance, then even if it is your expenditure, it will not be allowed as expenditure because you didn't deduct tax from the payment made to the non-resident. Now, who is a non-resident? Non-resident is a person which is considered and which is calculated and which is taken into consideration for the tax purpose, for tax rate purpose. If you remember, in the first class, we discussed the provisions of the status of the taxpayer, resident or non-resident. Who is resident or who is non-resident? You can go through the definition of Section 2, Clause 55. Clause 2, Section 55. So resident is defined in Section 2, Clause 55. Please go through the definition of a resident or non-resident in Clause 55 of Section 2. So the next item under Section 30, deductions not admissible under any circumstances. Any payment to provident fund or other fund established for the benefit of the employee unless the employer has made effective arrangements to secure that tax shall be deducted at source from any payments made from the fund which is taxable being income falling under the head salaries. So provident fund. What is provident fund? Future fund. If you are a salaried person, then the employer, what he can do is that he makes a contribution, he forms a fund that is called provident fund. Provident fund means the fund from which in future you will get a lump sum amount payment from the employer, and this provident fund is formed by the contribution from the employer and contribution from your salary. So a portion of your salary will be deducted and the employer will give a portion of the contribute some amount, then that will be deposited in the provident fund account, and whenever you retire you will get the money from the provident fund. But the employer must make provision to deduct tax at the time of making payment from the provident fund. If that is not the case, then the payment of provident fund from the provident fund to the employee will not be allowed as an expenditure, even if it is a genuine expenditure or expenses. That's Section 30. We are discussing deductions not admissible in certain circumstances. Again, it says that uh, uh, the employer, if you remember Rule 33, Rule 33 capital A to capital J, which deals with perquisite paid to the employee. Employer can give perquisite to the employee, but if the employee receives the perquisite over a certain percentage, then that is taxable in the hand of the employee. We have seen that while calculating perquisite under Rule 33 capital A to 33 capital J. But now this has implication. The payment of perquisite has implication for the employer as well, because if the employer pays makes a payment of perquisite to the employee beyond a certain limit, then that excess perquisite will not be allowed as an expenditure, and that will be treated as not allowable, inadmissible expenses, and that will be added back to the income. That is mentioned in section 30 clause E. Please go to clause E. It says that as so much of the expenditure by an SSC on the provision of perquisites as defined in clause 45 of section 2 to an employee as excess taka 4,75,000, and to an employee who is a person with disability as excess taka 25 lakhs. So if this is the case, then exceeding, if you make payment to a normal individual taxpayer in excess of 4,75,000, the excess amount will be taxable, and to a person with disability, if the payment exceeds to taka 25 lakhs, then that will be added back to the income of the SSC, and tax thereon will be imposed accordingly. This is, although this is genuine expenditure as per section 29, this will not be allowed because it doesn't qualify this criteria or condition. There are some other items which are allowed under section 20. For example, expenditure in terms of advertisement, free sample by the pharmaceutical industries. So in that case, there is a limit. There is a limit that beyond, if you claim those expenditures beyond the limit as mentioned, prescribed in Rule 65 part 2 of the income tax ordinance, then those will not be allowed as expenditures. So please go to Rule 65 of the income tax manual part 2 income tax rules. Now again says that an expenditure exceeding 10% of the net profit disclosed in the statement accounts under the head of expenses by a company not incorporated in Bangladesh under Companies Act 1994. This is another important issue. Please note well, the issue is that sometimes the multinational corporations, the multinational corporations, to evade tax, to lower down the burden of taxes, what they do is that they make a payment to the head office, a huge amount of expenditure amount they claim as expenditure as head office expenses. So what is the implication of those? That it reduces the profitable income of that institution. So for example, if I say the Standard Chartered Bank, it is a British chartered bank. The head office is in the UK. So what it can do is that the British head office, sometimes they visit the local Dhaka office, they give advice, they give technical support and other things. So in exchange of that, the Bangladesh office pays them an amount of money which is known as the head office expenses. Previously, a huge amount was charged, lowering down the profit of the local of the branch office. So now the law says that, the income tax law section 30 says that whatever might be the amount of payment, but if you payment exceeding, if the payment exceeds the 10% of a net profit, then this will not be allowed as expenditure. You can make a payment to the head office as head office expenses only up to the 10% of the net profit disclosed in the income tax return or in your books of accounts, not beyond that. If you do so, then that will be disallowed, and that will be added back to your total income, and you have to pay tax on that. Again, it says that any payment by way of royalty, technical service fee, technical know-how fee, or technical assistance fee exceeding 8% of the net profit disclosed in the statements of accounts. It's like that. If you make any payment under the head royalty, technical fee, etc., that must not be 8% of the net profit disclosed in the books of accounts. This is like the previous one, that is head office expenses. Again, it says that any payment by way of salary or remuneration made otherwise than by cost check or bank transfer by a person to an employee having gross monthly salary of taka 15,000 or more. Here is another important issue which says that, well, if you make a as an employer, you are making a payment to your employee, and if the salary, it says that if the gross monthly salary is having a gross monthly salary of the or more, if the amount of salary you are paying to the employer is 15,000 or more, then you have to pay that in a cost check. Again, if you make a payment to the employee as a salary under the head salary 15,000 or more in a month, then you have to make that payment in a cost check. If you don't make that payment in a cost check, then this will be your expenditure, but that will not be allowed because you didn't make the payment in cost check. Another item is that any expenditure by way of incentive bonus exceeding 10% of the net profit. What the business people do is that sometimes they say that I have made the profit, but the thing is that I have paid incentive bonus to my employee. So a huge amount is being claimed as incentive bonus. Now law makes the limit, law sets the limit. It says that any expenditure by way of incentive bonus exceeding 10% of net profit, it the payment of incentive, it says that incentive bonus, the amount of incentive bonus must not exceed the 10% of the disclosed. This is like the provisions as discussed. First of all, that 10% of the management expenses is like that, the same nature expenditure. Next, it says that any expenditure by of overseas traveling exceeding 1.25% of the disclosed turnover. So this is like that, the same nature. Any payment by of commission paid to or discount made to a shareholder director by a company. So any payment by of commission paid or discount made to its shareholder director by a company. If there is a shareholder director of a company and you make a payment to them, to that shareholder director under the head commission or discount, then this will not be allowed as expenditure because the director is getting the dividend. If you remember, director and companies, they are separate. If you remember the Corporations Law or Company Law 1994, Companies Act 1913, it says that a company is a separate legal entity than its members. And the famous case, if you remember, Solomon Company Limited. Any payment by a person exceeding taka 50,000 or more, otherwise made than by a cost check or bank transfer, including payment of the purchase of raw material, etc. So this again says that if you make a payment on account of purchase of raw materials, etc., beyond 50,000, then you must make the payment by cost check. Any payment by of any rent of any property, whether used for commercial or residential purpose, otherwise than by cost check or bank transfer. So if you make a payment of house property, a payment by of any rent of any property, whether used for commercial or residential purposes, otherwise than by cost check or bank transfer. So if you make a payment to any person, to the landlord, payment under the head rent, then you must make that payment in a bank or through bank or cost check. If it is not the case, then this expenditure will not be allowed. So there is another last one which says that any payment made to a person who is required to obtain a 12-digit tax certification number under clause 28, 29, and 30 of subsection 3 of this section 184A, but fails to hold the same at the time of payment. It says that under section 184A, section 184A discusses the requirements of obtaining the TIN certificate. So if someone fails to take the TIN certificate, tax first 12-digit tax first identification number, and any payment is made as per clause 28, 29, and 30 of subsection 3 of section 184A, then that payment will not be allowed as an expenditure. So here is the discussion regarding the expenditure not admissible under certain circumstances. So this is very important, I tell you. Here I finish video number 1 under class 3, heads of income. I'll be back in video number 2, class 3, with more heads of income, like income from capital gain and income from other sources. Until then, take care, goodbye, see you then.